Welcome back to Investing Talk Podcast.
Today, we're looking at Ford Motor Company.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
Let's do it.
When you look at a company like Ford, with its history and its scale, the story is usually about stability. But what we're seeing now is, well, it's way more dynamic.
A real shift.
A genuine strategic pivot. They call it the Ford Plus plan. And the interesting thing is it's actually delivering immediate measurable results.
So when you say immediate, you mean just pure sales strength, right? Yeah. That momentum. We saw their Q3 U.S. sales were up, 8.2% year over year?
Exactly.
That's a huge number in this market. But I think the real story for investors is that it marks 7 straight months of growth.
Mm-hmm. That's the consistency.
In the auto sector, that kind of sustained run, that's the foundation for any bull case, really.
It absolutely is. And that consistency gives management the confidence to raise their guidance, which is exactly what happened.
Right. They bumped the EBIT guidance.
They did. Up to approximately $7 billion for 2025. And for anyone listening, EBIT is basically a key measure of a company's operating profit.
And that was up from what, a $6 to $6.5 billion range?
It was. So this isn't just, a good quarter. It's a real signal of underlying strength and better cost management. The market sees that as something permanent, sticky.
And that revision is so critical. It shows the strategy isn't just a slide deck. It's actually working. It's hitting the bank account.
Yeah.
And speaking of that, the free cash flow story is holding up, even with all the restructuring, which we definitely need to get into.
It is. The adjusted FCF guidance is firm at $2 to $3 billion. And FCF free cash flow, that's the cash they generate after all the bills are paid.
The money they can actually use.
Right. To pay debt, invest, or give back to shareholders. And what's key here is that they're trending toward the high end of that range. Mm-hmm. That liquidity is how they're funding this whole transition.
Okay, so let's unpack that, because the numbers you're talking about, they suggest this old school manufacturer is totally changing how it makes money. What's actually driving this?
That brings us to what is, I think, the most fascinating and defensible part of the whole business. Ford Pro.
Their commercial division.
Yeah. If you want to understand the modern investment case for Ford, you have to look at Ford Pro. This isn't just a side hustle anymore. It's becoming the main economic engine.
It almost looks like 2 completely different companies under one roof. Can you just break down the profit split for us? Because the contrast between Pro and their traditional gas business, Ford Blue, it's pretty staggering.
It's jaw-dropping. Ford Pro is projected to bring in between $7.5 and $8.0 billion in EBIT this year. Now compare that to Ford Blue. That's their very profitable traditional gas and hybrid division. It's projected to deliver a solid, but much smaller, $3.5 to $4.0 billion.
Wait, so Ford Pro is on track to be twice as profitable as their core traditional business.
That's right. It tells you everything you need to know about where the value is shifting.
So hold on. The real money isn't just from selling tons of work trucks and vans. It's something else. Is the difference here really software?
That is exactly it. The secret sauce is not the sheet metal. It's the recurring, high-margin software and telematics revenue.
So things like fleet management tools, maintenance alerts.
Exactly. Things businesses pay for every single month to run their operations better. It's sticky, it's predictable, and it's high-margin revenue.
And it sounds like commercial customers are buying in pretty quickly.
Phenomenally fast. Subscriptions for commercial software were up 27% in 2024 alone. We're talking about 650,000 subscribers. Oh. And this creates a huge competitive moat. Once a big company integrates Ford's platform into its daily operations, the cost to switch to a competitor becomes enormous. It creates this incredibly stable, profitable revenue stream that protects them from the usual ups and downs of the consumer market.
That's the key, isn't it? The consumer side can dip in a recession, but businesses still need their fleets running. Okay, let's shift gears a little, because at the end of the day, Ford Pro is still built on hardware. And you can't talk hardware at Ford without talking about the F-Series truck.
It's the bedrock of the whole operation.
It just refuses to give up that top spot.
It really does. In Q3 alone, they sold, over 207,000 F-Series units, up almost 5%. Year to date, it's over 620,000. They have a dominant lead.
And that gives them pricing power.
Huge pricing power. When you have the country's best-selling vehicle, you dictate the price, and that profit flows right into that Ford Blue segment we were talking about.
And beyond the big trucks, I find their whole electrification strategy really pragmatic. They're not just diving headfirst into money-losing pure EVs. They're focusing on hybrids, which seems to be the sweet spot for consumers right now.
It's the Goldilocks strategy. Their electrified vehicles, and that's hybrids, plug-ins, and EVs combined, are already 15.7% of their total sales,
And that's growing fast.
a nearly 20% year-over-year increase. And the focus on hybrids is smart because it solves for affordability and, range anxiety. It's also important to note that if you combine all their electrified sales, they actually outsell their major rivals. They're playing the long game.
And they're backing it up with tech. We see them developing that universal EV platform to make cheaper EVs possible down the line. Plus, you have things like Blue Cruise, their driver assist system. It has over 6 million hours of use logged.
That real-world data is invaluable.
It's a huge advantage.
So let's talk about how the market is reacting to all this. Looking at the technical trends for 2025, the stock has had some really substantial gains. We're talking 33% to 42% year-to-date.
That's a direct reflection of everything we've been talking about, right?
Yeah.
The Ford Plus plan, the market share, the guidance.
Exactly.
And from a charting perspective, it looks like we're in a strong accumulation phase after that big rally. Analysts are pointing to the alignment of the 50-day and 200-day moving averages as very bullish.
And for listeners who don't track charts every day, what that basically means is that the short-term price trend is staying consistently above the long-term price trend.
A sign of building momentum.
Right. And it signals that the momentum is supported by real financial stability, which, in this case, goes right back to Ford Pro's strength and that positive EBIT guidance.
And if you zoom out to the bigger picture, you have macro catalysts helping out too. The constant talk of Fed rate cuts, whenever they finally happen, that's going to boost affordability for big purchases like cars and trucks.
Sure. It helps the whole sector.
It does, but it directly helps Ford's focus on affordable hybrids. It's all part of this rotation into what people are calling value autos.
So this brings up an interesting question. What's the speculative side of this? Where could the real surprise growth come from?
Well, with this much momentum, there are always rumors floating around.
Of course.
We're hearing some unconfirmed whispers about their EV division, Model E, getting to profitability faster than that 2026 timeline. And it's tied to talk of an affordable EV pickup, maybe around $30,000, launching as early as 2027.
That would be a game changer.
It would. And then you've got advancements in Level 3 autonomy through their subsidiary Latitude AI. It's speculative, but it adds a lot of excitement to the story.
Okay, but we have to be thorough. We need to flip the script and address the central risk, the big elephant in the room for the bears.
You mean the massive $19.5 billion EV restructuring charge? That's a number that makes any investor pause and ask some serious questions.
It is. And it's essential to understand what that charge really is. It's not a failure so much as it's a strategic accounting move. A painful but necessary clean slate.
So they're just writing down the value of old EV plans that weren't going to be profitable.
That's the essence of it. They're shifting capital away from chasing unprofitable pure EV volume and putting it directly toward those high-return areas, hybrids, and of course the Ford Pro trucks.
But $19.5 billion is still a huge number on the books. Does that mean that cash is flying out the door right now?
This is the crucial part that people often miss. And it gets into the difference between GAAP accounting and adjusted earnings.
Okay.
That massive charge does not affect their adjusted earnings, which is the number the market really cares about.
Right.
It filters out these big one-time charges. So the $19.5 billion is mostly a non-cash, on-paper write-down.
So the market looks past it because it doesn't really reflect the day-to-day profitability of Ford Pro or Ford Blue.
Precisely. And what's more, the actual cash impact from this whole thing is largely delayed. The big hit, about $5.5 billion of that, won't really happen until 2026 and 2027.
So it preserves their liquidity for now.
It does. It lets them confidently fund things today,
Right.
like the $2 billion they're putting into battery storage. It's a managed pain point that's mostly priced into the stock by now.
What about the other risks? We should touch on the 2025 recalls and quality issues, plus the stock sometimes dips a bit.
Those are definitely valid concerns, but management, the CEO specifically, has made quality a huge public priority. And again, this is where the stability of Ford Pro comes in.
It's the buffer.
It's the buffer. That consistent high profitability from the Pro segment acts as a reliable counterweight against short-term recalls or dips on the consumer side. It provides a solid floor.
Okay, so let's tie all this together. What is the core investment thesis for someone listening right now? What's the high-level summary?
The elevator pitch is that the Ford Plus pivot has worked. they've successfully redeployed capital. By raising guidance while shifting money out of unprofitable EVs and into high-return trucks, hybrids, and especially that Ford Pro software business, they are set up for free cash flow acceleration.
And the financial rationale seems solid. They're balancing that future growth, like the battery investment, with shareholder returns through a pretty healthy dividend.
It's a balance that shows management's confidence, right?
For sure.
And the outlook here isn't just for a quick trade. This story really calls for a multi-year hold, targeting compounding returns into 2026.
Because that's when the EV restructuring should really pay off.
That's an inflection point. When the Model E segment is expected to finally hit profitability and prove the whole strategy was right.
It's just clear this is a company making huge, painful changes today to make sure it's profitable tomorrow. And the fact that the whole story really hinges on the success of those high-margin Pro subscriptions, that's the crucial thread holding it all together.
It really is. So the question you should be asking yourself is this. Is Ford still a manufacturing company with a software side hustle, or has Ford Pro transformed it into a software platform that just happens to sell trucks? Thanks for joining us for this analysis. Make sure you subscribe to the podcast so you don't miss our next deep dive into the market.